The next four market experts together would have experience which would total about, say, 100 years worth of investing knowledge between them. And to find out the good, the bad, and the ugly of it, let me welcome Menaka Doshi on stage. And joining her will be our market gurus, Raamdeo Agrawal, Joint Managing Director at Motilal Oswal Financial Services, Manish, Chokhani, Director at Enam Holdings, Ramesh, Damani, member of the Bombay Stock Exchange, and Kela, Chief Investment Strategist at Reliance Capital.
Investing is much more than just a bunch of numbers, a bunch of forecasts. It's about using, all the three faculties or all the three sort of attributes that human beings have that have already been touched upon in the previous part of the evening: your head, your heart, and your soul. And when you have four veteran, celebrated individual investors here on the panel, you let them do all the heavy lifting. So what we're going to do with these four, as Samara correctly pointed out, we have, amongst them, they have about 100 years, I would say at least, of investment experience. So, sorry?
I'm almost that old.
You're almost that old? Okay, that's not true actually.
You should clarify, I'm the youngest over here.
Okay. Youngest, Manish is the youngest, Ramesh is the oldest. I'm not arguing with that. But what we did was, in the last couple of days is, each one of them have identified their best investment decision, the bad investment decision in their life, and the ugliest investment decision in their life. This is quite literally 100 years, good, bad, and ugly of investment decisions. I've listened in to some of them as part of my research. I can tell you it's going to be a fabulous 1 hour to listen to them, the lessons they have drawn from those experiences. So I'm going to start with Manish, who's right to my left, who's young, and whose best investment decision has also been to find them young. I don't mean this badly at all. I know it sounds odd. But
it started in college, right?
No, so explain to me what you mean by that, why that's an investment philosophy,
right,
and how you've benefited from it.
So it's back to a bit like what Vallabhbhai was speaking earlier, that thematically equity is about rate of change.
Sure.
And it's the young people who create change. And what I've found in the markets, and when I was doing a job a few years ago, we even published a nice piece which said, if you look back in history, if I look at the 1990s, for example, who were the biggest wealth creators, they happened to be CEOs in the age group of the 40s. So Deepak Parekh or Subhash Chandra or Narayan Murthy, Azim Premji, they were all in the age group of 40s. So what we called it is, you have the sort of enthusiasm of the 30-ish year old and the wisdom of the 50-ish year old, and you're right in the sweet spot over there. If you take the last decade, Anand Mahindra, Dilip Shangvi, Mukesh Ambani, Uday Kotak, Bhaskar, but all came in that sort of domain. So we look for people who are in really the peak of their career, and they tend to create outsized returns in that decade. So it's less about the sector and more about the person and the company that he or she is running. And now, in the new hat which I wear as a private equity investor, I'm finding, of course, in the new digital e-commerce age, is the 30-year-olds are just blowing you out of, the confidence, and their ability to take on the world and think world scale and world class is just amazing.
So how do you identify the current crop of 40?
So
who's the Deepak Parekh of today?
So, well, I mean, illustratively from a stock market perspective, if you think of it, 20 years ago, the Birlas and Tatas were 50% of the index weight. They're currently probably 5%.
Yeah.
But the good news is, Cyrus Mistry and Kumar Mangalam are in their 40s. And do you think both these groups will be recast in the next 10 years and will look substantially different? I would think so. Rajiv Bajaj is in the 40s. We never thought of Siddharth Lal. We never thought of Anil Gupta at Havells. So many people.
Has this 40 thesis ever been proven wrong for you?
I'm sure there are people who in their 40s blow up. So
yeah, I mean, you're not suggesting to this audience, if he's 40, invest in this company.
So I mean, that's not a given. For example, when we publish it, and with no disrespect, Jayaprakash Gaur was on the list as well. So we know what happened there.
No disrespect. Yeah, all right, okay. So find them young. That's been your best investment philosophy, Manish.
Yeah, someone who's thinking disruptive and not like, let me just do what is being done, but someone who's trying to change the way business is done, and he's playing a new game, or she's playing a new game. rather than just following a path which someone else has trod.
I'm going to move on to Raamdeo Agrawal. Now, most of you watch CNBC-TV18, and if you do, you already know that his best investment decision has been Hero Honda, right? But there is a story behind that, how he arrived at Hero Honda and what it means in terms of applying the value migration philosophy. So talk us through how you identified Hero Honda, why it worked for you, and can you sort of duplicate or replicate that philosophy even in this current market situation?
Yeah, so going back, it's very difficult to remember what all went through your head before you picked up the stock. But one book I remember which really transformed the whole thought about Hero Honda, and a lot of stocks I picked up later on, is the concept of value migration. It's a book written by Adrian Slowetsky, not very publicized, but wonderful book.
Sure.
In fact, if you go to Infosys library, the first book in the front is the value migration.
Okay.
Because what happens is in the businesses, values don't stay at one place. So values keep moving, and what you have to chase is where the next. What is important is not where the value is, where the value is going to be. So, and it's very predictable in many places, like when the privatization happened in banking sector, the values of the banking has to move from public sector banks to private sector banks. And that's where HDFC Bank came. So the guys who bought HDFC Bank, when it went public at $30, you know what has happened.
Yeah.
Same way, in 80s and early 90s, it was all the era of scooters. And the world was actually of motorcycle. So the entire market moved from scooters to motorcycles. From a 90% scooter market, it became 90% motorcycle market. So this migration is very important. And this value migration keeps happening across the world, across the businesses. Right now, huge value migration is on. So that we'll talk a little later. But as far as the Hero Honda is concerned, at that point of time, scooter market was ruled by our dear Bajaj. And it was moving from scooters to motorcycle. And this motorcycle company had already come up in 1984-85, but they're struggling. And the products were very much in demand. It was actually retailing in black for 4,000 rupees. And I could see the migration, and the size of the company was just about 1,000 crores. And Honda and Hero, both were the huge giants. Globally, India was the last large market where penetration was very low. At that point of time, probably 1 or 2% of motorcycle. So opportunity was literally unlimited, and combination of Hero and Honda couldn't have been matched by anybody. I mean, 60-70% market share for Honda globally.
Yeah.
So, and you were getting a 10-12 P multiple. Return on equities were for 30-35. So, I mean, it was all, and then in the next 6 years, it became 40 times for us.
Right.
So, what happens is, then next was the same value migration happened in the wired to wireless.
In telecom.
In telecom. And you see what happened in Bharti too. I mean, Bharti I bought at about a $1 billion kind of market cap, about 4,500 crores. And it went to about 250,000 crores in 3 years flat. 50 times in just about 24 or 30 months. So I think the power of value migration is massive. So far, value migration was much more local. Now we are looking at global value migration. The biggest one which is on right now is the software. From developed world to India. Now it's a $1 trillion software services market. We have gained 10% share in last 14 years. We were about 5 billion out of 500 billion. Now we are 100 billion out of a trillion. In next 15 years, when the software services market goes to 2 trillion, India could be 500 billion or maybe even a trillion. Who knows? So, this value migration is probably to my mind, it is the biggest, and it can shape the future of the country itself. Forget about you as an investor.
Okay, 2 follow-up questions to that, Raamdeo. One is that, you've identified IT as the next area where you see value migration.
But it's already on.
Yeah, or it's underway right now. And in fact, that's linked to my question. It might seem like yesterday's story. What's tomorrow's story in value migration?
Yes.
Which sector, area, space, industry, technology do you see this take place in?
See, 2 sectors which are clearly happening right now is, I think we are halfway through in tech, where bulk of the money is made. I think Infosys has been about 3,000 times up between 92 and 2014 already. And still the story is not over. The best is still ahead of Indian software. But as the early stage, early multi-baggers out of less than $1 billion, that is over. I mean, these companies are $30-40 billion market cap.
Sure.
But there will be a lot of tech-oriented companies will come in this segment itself. Then second one, which is on very big, is the globalization of generics business in pharmaceuticals. Globalization of? Generics business.
Generics business. Okay.
A lot of people, they think that generics opportunity out of India is almost as big or bigger than that of IT opportunity. Because IT opportunity could be dated. I mean, 25, 30, somewhere computers will become very smart and you may not need software services as much as you need today. But molecules are like, you know, so...
so pharma is the space where you see big value migration
that's why you see
here.
The youngest Sancheti has become so much rich and so fast and still growing at 40-50%. In fact, funny thing is, as the skill is increasing, his rate of growth is increasing. It doesn't happen like that.
When do you sort of assess that the value migration to this business technology sector is pretty much done? I just heard you say the bulk of the money has been made in IT, right? You still hold on to Hero Honda. I'm not asking you when you will sell, but how do you assess that thus far and no further? This is the time for me to now move on to something else.
So one is that how businesses are happening, what is the positioning. Now they have got global opportunity. You know, they are free from the old joint venture.
Hero Honda.
Yeah, they have an opportunity to become world's #1 themselves.
Right.
So whether that journey is going to be successful or not, so you keep assessing. Because for me, I bought at 30 bucks, I get 100 rupees dividend every year. I've got 1200 rupees dividend itself. I can sell it for 3000 bucks today. So it doesn't matter in the sense that the problem is not so much for the for me who bought at 30 bucks. It is for the problem is for the people who will buy at 3200.
Sure.
So my mindset is very different on that.
Okay, I'll come back to the issue of entry and exit timing in just a bit. But I'll go on to Madhu's story. It's a fabulous story of how persistence pays off in investment. You know, you've heard of how to identify some companies, but Madhu's story is linked with the promoter who refused to meet him. He cornered him down, and this story, I think, is one of his best investments, has earned him the best return. So you hear it from the horse's mouth, so to speak. Madhu.
So this was way back in 2002-03 when our fund size was very, very small, maybe 50-100 crore rupees. And even brokers were not picking up our calls, forget promoters. So it was very tough to meet promoters those days.
Right.
And this was a company based out of Hyderabad called Divi's Laboratories. They did a public issue, and the market cap at the listing time was 140 crores. So basically, you know, a lot of the tricks which we have learned later on, but one trick which we knew that if you really identify any team or any individual who is really passionate about what he does, then success is only a matter of time. So actually, even in those days, I did a tremendous amount of work on Dr. Murali Devi personally. And we found out that, you know, since 1969, the only thing which he is talking about is chemistry and pharmaceutical. And he is extremely passionate. So I got a chance. I had to travel all the way. And
so tell them the story, because it's quite cool. He was on a flight to London.
Actually, you know, I asked for a meeting for 2-3 months, but he said that I am not wanting to raise money and I don't want to meet anyone, forget you. And whenever we do the public issue, I will come and we'll have an investor conference, and that time you can ask me any question which you want. He actually came on the phone, he actually told me this much.
That I don't want to meet you.
But I did not leave it. So I found out when he was flying to London, and I bought a ticket, sat next to him, and I told him, now you don't have any choice but to listen to me. And I showed him my return ticket. That, see, I have no business in London, and that was coincidentally my first trip to London. So
you were quite literally going to land in London, turn around and come right back.
I showed him my return ticket, and he actually appreciated my sincerity, that this guy really means business. And we spent like 5-6 hours trying to understand how big this opportunity of CRAMS could be, how big the opportunity of, the API business could be, and what their real skills were. So, you know, that 140 crore market cap of the listing is today 24,000 crores.
Yeah.
And Touchwood has worked out very well for us.
Excellent. And what a lovely story. But, you know, I don't want you to end there, Madhu, because your persistence was not on display just at the beginning of your investment in this company. Thereafter, you told me that you followed up with your interest in DV Labs. So it wasn't just enough to identify the opportunity, find a way to meet the promoter, you know, invest in the company. You've persisted with your interest in the company. And I mean, the reason I'm stressing on all of this is because you guys make it look so easy when you're on CNBC-TV18 talking about your investments. It's so important for the rest of all of us to know how much effort goes into it.
So, you know, as we have seen, as our great guru in the stock market, I will not name it. Stock market, the most difficult thing is to digest your profits. And there were times when we had disbelief on those profits. That, can it be, how can the investment go 100 times and can it still go higher? And that from disbelief to belief is only your persistent work on the company, on the industry, on the dynamics of the competition which is taking place. So we have, my colleagues have gone to Germany just to attend fairs on contract research and manufacturing. They will spend like 2-3 days trying to understand what the competitors of Divi's are doing versus what Divi's is trying to do. And I also make it a point, even till date, every year I have to meet him at least once, if not twice.
Except that you no longer need to buy a ticket.
Exactly.
Okay, I'm going to move on to Ramesh, and he's identified his best investment decision / philosophy as one, excuse my language, of sitting on your ass. Ramesh, why is that the best investment decision that you've ever made?
Menaka, thanks. Thanks for inviting me here. I landed in India after being in America in 1989 as a freshman MBA, middle of a big cement boom going on in this country. And I couldn't name a cement company in the world. I mean, I just had no idea about it. But the last week was full of cement companies going up. So that intellectual process started there. And I realized, when I look back at my career, now about 25 years in the last week, what an extraordinary opportunity this country affords us. I mean, you look at the great fortunes that were made in America, the Pritzkers who made it in Hyatt, the Rockefellers who made it in Standard Oil, the Xeroxes, the IBMs of the world. And the same scenario was replaying in India 50 years later. If you bought those companies in the 50s in America, the Philip Morris, the Xeroxes, the IBMs, you made your family rich for 3 generations. And that same opportunity was available to India if Raamdeo saw Hero Honda. I happened to get lucky because I worked in the technology background. As Steve Jobs famously said in his valedictorian speech, graduation speech, that you connect the dots in your life. Because I was working in technology in America, and I had, on one of my summer visits to India, visited the Indian Railway Reservation Center. They were being computerized at that time by a company called CMC. Now, if you understand the magnitude of that problem, there are 6,000 stations, 10 classes of travel, how many millions of passengers going every month. To computerize them, control them is a gigantic program. And yet, with the government of India, God bless them, disinvested CMC in, I think 95, 96 it was. They disinvested at a market cap of 20 crores. 20 crores for a company that has, I mean, if you bid IBM this project, they would have charged you 200 crores to do that project. And you're getting this whole company with its real estate, assets, engineers, whatever, for 20 crores. The stock, fortunately, I managed to buy, was up 50x in the next year. So that led me to believe that the opportunities are so great, whether it was in technology, whether it is in pharmaceuticals, whether it was in hotels, whether it was in media, logistics. A young man with nothing more than an MBA and some brains in industry, a little bit of money, can buy and pick 100 bags of stocks. And in the process create wealth, not for himself, but for 1 generation, 2 generations, 3 generations, and for the society at large to give back. So that's the good part of the Indian economy. Extraordinary opportunity. We've had every single problem in India in the last 25 years. We've been at war, we've had Kargil, we've had plagues, we've had governments fall, we have the Communist Party coming in and saying, we don't like equities, and yet the index has gone from 600 when I started to 30,000. And finally, let me please put this, because people just don't get it, especially the young audience and the people at home who don't invest in equities. If you hold an equity for 12 months, it's tax-free. The dividend is tax-free. The government is giving you the greatest single bailout that they can ever give. And people still don't get it. And that's the message that I think the good part that people need to understand, that it is tax-free, and if you use industry, you use a bit of due diligence, they're just unbelievable opportunities. They were great opportunities in 1990. Trust me, I speak from the bottom of my heart. There are even greater opportunities today than they were in 1990.
Well, you've made a very powerful pitch for why more Indians should invest
I'm a broker,
in equities.
But I like people buying equities.
But I have to ask you this, to go back to the point of what your best investment philosophy is, and to explain to people why I use the word ass in a panel discussion. Staying power is the most important thing that people don't give enough emphasis or importance to otherwise. Why do you believe that, sitting on your rear end, as you put it so politely to me on the phone, is the best thing you can do?
It's the old English proverb there. Rome wasn't built in a day. Sure. Great businesses aren't built in a day. They take time to build, and great businesses will go through cycles. Raamdeo has figured it out in Hero Honda. Rakesh earlier figured it out in Titan. Great businesses go through periods, and they will climb through bull markets and go down in bear markets and then pick up. So Warren Buffett says this, and you actually have to believe this in order to be successful. Believe that you're buying a part of a business, that I own 1% of this company, I own 1,000 shares of this company. I'm not buying a price or a piece of paper that will fluctuate and scare me. If you believe that you're an owner of the business, you will think about it differently. So my advice to everyone is, while it's very tempting and very sexy for the cocktail party to go and chatter about what you did today and how much money you made, the wealth is created by people who sit through this pain. To give you an example, back to CMC, I bought at 20, it was 800. It went as low as 200. Today it's like 4,000. So great businesses find a way to overcome odds and multiply your money.
But were you not tempted at 200 to sell CMC?
Not at 200, but at some price I did sell it. But that's the learning I got, that if you find a great business, there are two things you have to do. First, you back up the truck and buy as much as you can. And second, you hold on for dear life.
Okay, fair enough. Hold on for dear life. Manish, I come back to you. We've done the good. We'll do the bad. You call them the holy Diwali sectors. Tell us what that means.
So the complete opposite of the good businesses. There are occasionally businesses which are attractively priced, and a lot of the non-tech, the non-consumer, the non-pharma, the non-financials, which you really want to hold as a portfolio holding. You will occasionally get cheap. I know, each time I come on TV, you badger me about buying public sector banks or about buying infrastructure companies, or where you need heavy investments, or of course the commodity super cycle's over, but there are occasionally times when you can get those kind of companies cheap, but you really don't want them to last in your portfolio beyond the two festivals. So either you buy them at Holi and sell them by Diwali, or vice versa, and don't get wedded to those. But that's just to keep your excitement going. But really the portfolio should be in the 3 or 4 good sectors, which I think we've all made our wealth on those sectors. And it's not really
let me spell it out clearly. The sector that you're calling typically a holy Diwali sector is the infrastructure sector. Which in some ways you've told me that you've sworn to stay away from, and that you will never invest in.
It doesn't work for me. And the logic I have
I get, these are personal experiences. I'm not saying that you must generalize it.
That these require people with large amounts of capital and long gestation periods, and they're subject to so much uncertainty. It's right for a government to invest and a sovereign fund to finance it. Why are we getting into this? I don't have that much capital, because we are interested in, like in my case, it was a ZTV, it was an Infosys, it was, in the last commodity bull market, it was Vedanta, and people like that. But I don't need to necessarily go like I did in the 1990s. I remember getting clobbered in a stock called Trafalgar House, which is nice concern. And there are enough people who made money in that. And the last cycle was, if you would have gone into any of those, you would have been left holding the baby with the bathwater.
So you've sworn never to invest in infrastructure.
I don't have enough money to, spend time there.
So what happens if you see a great infrastructure story, or you're on a flight to London and you meet a really hot infrastructure entrepreneur?
So, Warren Buffett has a very lovely line I remember each time, and I remember when you were badgering even Rakesh about SpiceJet. He says, I applaud the effort, but I'll skip the ride.
Okay. Can you reinterpret what the meaning of infrastructure is? Are there investments that are not necessarily infrastructure in the most classical sense of infrastructure, but your vision of what infrastructure should be, and therefore outside your taboo area?
No, but like infrastructure to me, and even when you were asking Raamdeo about IT, for example, in the private domain, you can see companies like Mu Sigma and all coming up, which is extraordinary work going on the analytics side. But there are portions of that business already embedded inside a TCS and an Infosys and so on.
They're not classical infrastructure. They're not building roads and ports.
I'm not saying that, but when you see the other IT people who are building out the infrastructure, I mean, the new roadways of India are not the highways. It's when the PM talks of digital India.
Sure.
I mean, these are the people who are building the digital highways out. Like he gave his example on telephony, I was lucky in, again, that period where Max had the license for Bombay, and I bought Max very early. They, of course, subsequently sold it to Hutchison, but that's a piece of infrastructure. And you can think of it as the raw material is free, and all I'm paying is for airwaves. It's later
so that infrastructure you're okay
so
with.
That's fun, but when the government realizes that I can extract a pound of flesh from here, and when a government official tells me, ye to hawa se paisa kama rahe hain hamare wajah se, that's the time you pack up and run away from that sector.
So all the people who own infrastructure stocks in this room...
No, it doesn't work for me. Like he gave a great example of DVs. I've had terrible experiences in Hyderabad. I don't typically go and buy stocks over there. But that's me.
We'll leave that for your ugliest investment decision. Some suspense there. Raamdeo,
He's a brave man, that's all.
Okay. Your, in a sense, bad investment decision in your life, you've qualified as never depend on inside information.
Yeah.
This is the HDFC Bank story in your life, and it's worth listening to.
Yeah. So, HDFC Bank was the only bank IPO. I never buy into IPO anything. So that was the only bank IPO where I created multiple folios of my wife, son, whatever HUF and all, and applied in 16 names. I got 8 allotments, and I was thinking that this I'm going to hold it for whole life. And that stock got listed at 30.32, and it was so fascinating. I had created a fund flow and profit pool for next 10 years. And I was confident. I was thinking that it is going to be HSBC of India. That was my dream even in 96. Then I bought 5-6 lakh shares, accumulated that, stock went to 60, and then at that point of time, I had an analyst whose wife was working in Mr. Parekh's office.
Deepak Parekh's office.
Deepak Parekh's office. Now this is how it starts. And I don't know what kind of time that was. He kept on feeding me, sir, this NetWest engagement is breaking, and these guys, they don't know anything of ABCD of banking, and they will be in deep trouble.
Just because the NatWest relationship was going sour. Yeah.
So, and he was coming every day in the morning and giving me this sermon. So finally I said, let's sell it.
Ooh.
I sold the whole lot of 6 lakh shares at about 52.5 rupees. I never saw the price again. And you know, I think it is worth 300 or 400 crores right now. So I never allow anybody, even Hero or all these companies where I'm kind of there for 17, 18 years and all. I never bother about the inside information. Never. I mean, on the first, if numbers are coming, I'll wait for the first night or second night, but I'll never call up anybody because I just don't want any inside information in my portfolios.
This must really hurt, right? Whenever you see the HDFC Bank on the ticker.
That's okay. You always can rectify, but I mean, inside information is very expensive, I'm telling you.
It's also illegal.
And let me tell you this, Rajat Gupta episode. This Galleon, what is Galleon Fund? Rajaratnam. So he visited my office.
Rajaratnam.
So he said, we compensate only, the travel expenditure we compensate only if you get insights.
Yeah. Insights. That's what he called it. Huh?
Yeah. So he went about collecting insights, and he collected actually inside information. And see where he is. So inside information is very expensive, I'm telling you. Never bank on that. Never, ever. If any fund manager says that I'm very close to this management, and hence I know everything about the company, I would not give money to that guy.
It also speaks, you know, in the converse sense, Raamdeo, of having conviction in your own, the reasons on which you bought the stock, right? You did a considerable amount of work before you invested in it. You went to all that effort with all the multiple folios. You had conviction that this is going to be a great story.
You're
and
buying the
somewhere
future.
you gave up on your conviction.
Yeah, I mean, I didn't use my head. I just went by the analyst's wife's call, you know, of all.
Don't listen to your analyst's wife. Okay. Madhu, bad experience, and we've almost touched upon this a little bit. You know, Ramesh highlighted it in a good way when he said, find a good opportunity, and then sit on your ass and wait for it to grow, right? The contrast is what you sort of label as one of the bad investment decisions in your life, which is not having holding power or staying power. This is the CRISIL story. So tell us.
I think, I gave you honestly only one name, but I have many bad experiences. So because you only told me to qualify one.
No, we can talk about 2, 3. I have no problem.
There are numerous.
You don't have that much time.
So I'm just saying, a lot of the times, as Raamdeo, we are very politely put, sometimes it is inside information and sometimes it is too much intelligence, which causes a lot of issues in terms of what you want to hold on. So,
what do you mean by too much intelligence?
Too much intelligence is basically when you have too many people analyzing and giving you all the gyan of the world and putting things in a very different perspective, that this has become like 30p, 40p, 50p, you can buy it, you can sell this, then you can buy this, then you can buy it again. So in our early years, I'll be very honest, I come from a small village, so I am not born in Warren Buffett's family. So we are all learning as we make mistakes.
Sure.
So I bought CRISIL along with Rakesh Bhaiya, way back. But the stock went up like 2, 3, 4 times in a very short period of time. And then I realized that it is already quoting at some 30, 40 PE multiple. So what is the hurry to hold this? I can always sell this and I can come back and buy this again. And actually it went down. It's not that after I sold it actually went down.
So you thought for a brief moment that you were right.
But I was thinking that I was a superstar, better than Rakesh Jhunjhunwala. That he's still holding and I am the super one who sold it and the stock has come down. But when it comes down, you feel it is still going to go down. And I'll actually catch it at the bottom.
I'll wait.
And I think, one of the worst mistakes you can make is really sell a good company for external panic. And we continue to make it. I will still tell you, I still make these mistakes. In 2013, again, was a very testing period for investors.
Sure.
There are a lot of business people in India were thinking कि 16 तारीख का रात का flight पूरा full था. 16th May. I know a lot of people wanting, if there is a third front government, we don't have to be visible here.
जाते कहाँ लेकिन?
कहीं पे जाते थे. But I'm just saying that, this circumstances actually test the real patience. And that is the time you can hold on to your conviction. That is the winning.
It also gives rise to questions. What do you do with a good company in bad times? But I'll leave that for our conversation, right after this. Great example or story in CRISIL. Just one second. Anuj, I don't remember stock prices or Nimesh. Anybody remembers where CRISIL is currently quoting? Where did it close today? Sorry? 1800.
But it's a split.
Man, it is gone.
Now, I want to know what time did you sell it? What price did you sell it
at? The time we are talking about, it was 6 crore equity, 100 and 110 rupee price. So it was a 60 crore market cap. That's what we're discussing. Yeah.
So this was quite some time ago.
I have stopped looking at the CRISIL stock price. As you said, Raamdeo, I have stopped looking at the price itself.
Okay, fine.
We should have bought the whole company. I know we were conflicted as Enam.
You had a problem. You did the same thing with CRISIL?
I was running the AMC in those days. And we had a problem because we would have been seen as conflicted. So I actually went to one of our clients and said, why don't we just... You take over 15% of the company and just, can you buy me 5 on the side? And he said, it would have cost, 5 crores or 10 crores to, buy 15% of the company. And we didn't do it and,
Did you hold it?
Rakesh, it was his destiny.
Yeah. 14,000 crores. 14,000 crores.
So it was 60 crores.
So when you sold it, it was 60 crores?
No.
You would have made a 10 bag.
When? Give me when did you sell it?
I bought it at 200-300 crores and sold it maybe at 1,000 crores.
At 1,000 crores. What did you say again? 14,000 crores. Yeah. I can imagine how bad you feel.
I'll just give you one more example of bad feeling. This was really, I was a naive investor. I used to work with Motilal Oswal. And I made a lot of money in broking in those days. We made tons of money. And I used to know the chairman of Federal Bank very well.
Federal Bank?
Yeah. And I bought that stock thinking that, I know this guy and he will give me all the information. And
inside
I'll be
information.
absolutely on top of it. All my hard-earned money, I put significant portion of that into Federal Bank. And, the stock came down from maybe 200 rupees I used to think, absolute market cap if the bank is 400 crore, what more can go wrong? And every time I'll call him, he'll console me, no, things are getting bad, it's all getting properly in shape, you don't worry. And actually the market cap of Federal Bank went to 22 crores only. So this is about all inside information and having access to people at the top.
Okay. I just want to make a quick disclaimer here. Inside information is also illegal. Please do not trade on it.
No, it's not like...
I mean, now the new regulations, etc., curtail in a big way what access you can have. Ramesh, your story about bad investing has to do with the value trap. This is the MTNL story. Goodness gracious. Why were you investing in MTNL
before that, I
to
want to
begin with?
complete Raamdeo's story. There's a flip side to the HDFC Bank story. And it illustrates a point that is so dear to my heart. While Raamdeo was selling his stock, a very wise friend of mine from Dalal Street, my son was turning 13, so he had what is called a thread ceremony. So all my friends were invited, and all of them gave him cash and clothes and toys, including my wife and I, and his grandparents. They all flooded him with something, except this wise friend of mine. He gave him 500 shares of HDFC Bank.
Lucky
worth
boy.
25,000 rupees at that time. 50 rupee price, 500 shares, 25,000 rupees. He still has them. They're worth 25 lakhs today. In a period of 20 years, it's gone up.
And he's had to do nothing, just sit on his...
He's a kid. He already owns 25 lakhs shares of HDFC Bank today from that 25,000 rupee investment. The moral of the story, Menaka, invest when you're young for your children in appreciating assets, not depreciating assets. Every single gift we gave him and the thread ceremony is gone, forgotten, over, except that wise gift of stocks which is still there.
Ramesh, not only when you're young. Remember Warren Buffett's wealth, 99% was made after the age of 50. So we live optimistically.
Yeah. Well, you all had age on your side. You all had age on your side. I'm not still sure
you had age but no money.
But to come back to
the MTNL value trap story.
I had made a lot of money in public sector stocks, so I was not averse to investing in them. We had bought CMC, as I told you, Bharat Electronics, Bharat Earthmovers. All of them were brilliant companies, made us 40, 50 extra money. So in the middle of this big 2000 boom going on in telecom, the TMT boom as it was called at that time, technology, media and telecom boom, MTNL seemed so cheap. I mean, everyone had a landline, people were talking.
But it was MTNL, Ramesh. Why in heavens did you want to invest in it?
It seemed cheap, so that's the value trap. And we always said, Kambala Hill mein itni badi building hai, that is itself worth 500 crores or 1,000 crores or whatever it was at that time.
All the copper.
Yeah, all the copper. And
all the copper.
See, we didn't realize.
The landline. They had the last mile into the home.
Last mile. We didn't realize that Bharti and Idea were going to eat them out for lunch. They could not even grow the cellular business. And as Raamdeo said, the telecom community was migrating to cellular traffic, and MTNL had no clue about that, or for some reason they were held back, maybe by corporate games, but they were held back. And the stock, I think it's probably the worst stock in the history of the Indian stock market. It hasn't shown a quarter of profit in the last 10 years, and I mean, I still own some of it. Like, I don't have the courage to sell it. I just don't have the courage. But
they're the best.
I mean, this is bad and ugly squared.
No, but what happened to the Kambala Hill building?
It's still there. It's still there.
It's not factored into the stock.
It's incredible. The government has let this company and BSNL, for example, go from being potentially 50,000 crore companies to 500 crore companies. It's incredible the public waste that has taken place in this. But that's not to excuse my faulty stock analysis. It was just a case of sloppy analysis.
Sloppy analysis. Also, you can connect the dots based on what you've already heard here. Because if MTNL was done by the likes of Bharti, then Bharti was run by a 40-year-old at that point, right? So there are dots to connect if you try and make that effort.
I don't know if he spoke about it that time, but Bharti had come 1900 crore equity, 40 rupee issue price, and it went down to 20 after that. And I was working those days for Reliance, for putting up the Infocom, and we thought they're going to eat everyone's for lunch.
And they did.
And would you have bought, okay, look at telecom. If you're saying you tell us a sector and tell us a stock, you could have bought Birla AT&T, which then became with Tata.
Yeah, it became.
Would you have bet on them or would you have bet on Sunil Mittal? Remember, there was a history in the 90s when he was selling handsets.
Well, the contemporary version of Birla AT&T is IDEA.
Well, it changed dramatically since then. So would you have done that, or would you have done Sunil Mittal? And you know Reliance entry is imminent, and you're seeing that again today. So you need analysis and you need guts. So he says it right. You buy right and you sit tight.
Okay. So that brings us, good is covered, bad is covered, MTNL is covered, whole different category or league of its own. That brings us to the ugliest investment decisions that they've made. I think for Manish, he said it includes both errors of omission and commission. Omission being that HDFC Bank is a recurring theme in our conversation. He never invested in HDFC Bank, though he had several opportunities to do so. And I think commission to some extent has to do with his whole Hyderabad experience. So he, along with swearing that he will never invest in infrastructure, has sworn that he will never go to Hyderabad. Explain this.
It's been one really bad experience, and the way I think of it is really, apart from Dr. Reddy and Divi's, really is come out from Dr. Reddy's. You haven't really missed much if you didn't go to Hyderabad. They're there in every cycle with every new industry.
No offense to our viewers in Hyderabad, please.
But there's some things which you're not meant to be, right, in your life. It's like if Tendulkar grows up and he starts playing hockey instead of cricket, it's bad news for him. So this is like one of those things that doesn't work for me. Better not to go there. The last time I went there...
You've never been to Hyderabad?
No, I go there, I enjoy the Falaknama and I come back. I don't visit companies.
Okay.
So the last time I went there, I had to go straight from the company visit to Tirupati. Because nothing else could have rescued me. And I lost 98% on that investment.
Which company was this that sent you straight to God?
I'll just give it in coded. It's Surdas. So those who are in the market will figure out.
Surdas?
I mean, you lose your eyesight when you invested in that. It went down 98% from the high. And we didn't lose all our money.
You're not talking visually.
I think
by the way, he's in
visually.
infrastructure now.
I think he's talking visually. Maybe it has something to do with soft vision.
And he happens to have
or something like that,
right?
right?
So, I mean, I don't know what you... And
can I hazard a guess?
We did so much research.
Can I hazard a guess?
I visited P&G in the US and tried to find out what they're doing, and they gave us glowing reviews and everything.
You've all but taken the name, right? I can take it.
No, let it be.
Anyone wants to hazard a guess?
Be kind.
Visual impairment, soft vision, all the all of that.
I've never lost 98% in my life in anything. And it was just paralyzed. I couldn't sell it.
And even God couldn't help you, right?
Even God couldn't help me.
Yeah, well...
I mean, thankfully it was a small investment, but you feel terrible. How could you make an investment like that?
Lesson learned, don't go to Hyderabad.
Yeah, I mean, there's some things
which are
too hard to do box.
Okay, too hard to do box. Why did you not buy HDFC Bank when you had the chance to?
I was just, like he said, it feels expensive, you don't buy it. But not just HDFC, even HDFC Limited, even now when you think of it, in 2000 it was an $8 billion industry in India. We spent, at that time it was a $150 billion mortgage, a real estate business, of which 8 billion was only happening in real estate. Even today, we have a total mortgage market of $120, $130 billion aggregate. And we sell $500 billion of real estate every year. Even from here, the mortgage business is going to compound dramatically. And we all sit and suck our thumbs and look for the next multi-bagger. The multi-baggers are all there in front of us.
But explain to us why you didn't. Even though you had several opportunities, what kept you away from HDFC Bank?
You feel I'm a value investor and I should buy cheap and this is discovered and I should do something different and unique. And we have those hang-ups in our head. And in a bank is levered and, God knows what they'll do with the leverage and why should I pay up so much? It's 3.5 times book. I can buy something at 2 times book. And I was young and innocent. I could find PSU banks at like half-time book and 1-time book.
Trap is big.
Oh my God. So, the value trap is something you stay away from, and when you find something good, pay up and just sit, because if you give away 1 year of earnings, it just compounds after that. So as you grow older, you become wiser, I guess. So I told you in the beginning, my disclaimer was I'm the youngest of the lot. So
you've got a long way to go to wisdom, is it? That's the reason why you didn't buy HDFC Bank. Now, some data that Manish provided me shows that for the last, 25 years? 30 years? Every cycle. Every bull cycle, every bear cycle. The two stocks that have outperformed are HDFfi Bank and HDFC. I'm just rubbing salt in your wounds, right? Yeah, okay.
I own them now. So.
Now you do, after all these years. Okay. Raamdeo, the worst, the ugliest investment experience of your life. When I asked you this question on the phone, you said, everywhere I went at that point in time, I was talking quality, and then I went and invested in Central Bank. Explain this, please.
Yeah, so, the central bank was my analyst was refusing to cover it. Actually he didn't cover right till date. And it was one of the very large banks. Actually when I was doing chartered accountancy, I have finalized this bank. And so I used to go at 11 o'clock in the night and that time it was all manual. So I had great respect for this bank in terms of, at that point of time it was a huge institution. And it was available for, the size of the bank was, I think, bigger or at least as big as HDFC Bank. HDFC Bank was trading at about 1,25,000 crores. This was available for 5,000 crores. I said, this is too cheap to believe. And it was the most expensive bank actually, it turned out to be. So it was so bad, the books were such junk. So in good time, when the economy was just going up, even the good ones look like blue chips. That's the biggest trap. We think that HDFC Bank is very expensive, let's buy central bank. And let's make it 5 times, 10 times, we know everything.
Then we go back to it.
And then the moment you buy, it moves up a little bit, and then the true color starts coming out. Like NPAs are running at 20% of the book, something like that.
But did you, when you bought it, did you sort of, somewhere in the back of your head, have that sort of sneaky feeling that maybe I'm not doing the right thing, but look, it's cheaper than HDFC Bank or something like that?
I was very clear.
You were convinced by it.
I don't know. I did all the work. I went and met the companies also and all kinds of analysis. I put my analyst also on the job. He stopped me from, don't do, sir.
He told you this?
He told me this. But I thought he doesn't know anything. Let me show him. And so you always, and the second one also happened because of that. Everybody stopped me from doing it. Actually what happens is, one of the things I have seen in spotting an idea is that nobody likes it. Whether it is a Bharti, I bought Bharti at 23 rupees 75 paisa. And everybody from my company and all the well-wishers, everybody wanted me to be out of the stock. So by the time it was 30 rupees, I was out of 1,25,000 position. I was out with 1 lakh. I said, this 25,000 I'm not going to sell, come what may. And then I persisted, and again I built 10 times position at 33. Then again at 87, my own analyst went to Arcom to work. And he was scaring me from there. That Reliance is going to kill you guys.
Not him, but he was
again I halved my position. Then again at 140, I said, you guys are nuts. We are going to buy it again. So again I piled on. So like that, people scare you all the way. Your conviction is always tested. And when it becomes really popular, then everybody is with you and price is there. So when you buy young this divis, I was sold out, I think this IPO meat, which was an offer for sale, they serve golden prawns.
At the IPO meet?
At the IPO. I think it is a very unique affair to get prawns being served in the IPO meet. And I was completely sold out. It was 130 crores, 130 rupees book value, and 130 rupees it was coming with 25% ROE. It was a sitter, absolutely. My analyst, who was like acclaimed as a good pharma analyst, don't touch it. It is from Hyderabad. So, when you stop using your brain and you start going
using
with the
analysts,
and since we have this 30-40 analysts, we have to at times listen to them.
And you remembered the golden prawns, huh?
I think, I don't know anybody attended, but... I didn't eat, but the guys who attended, they ate, they enjoyed it big time.
Okay, fine. All right. Madhu, ugliest investment decision in your life involved not keeping an eye on the door. The lesson being that you can find good opportunities, good sectors, good companies, but you got to know when you have to exit.
So this was like in 2006 to 2008, in those days. Whatever we'll touch will go up. Later on we realized that it is not so simple.
Whatever you touch goes down.
Exactly. So I think it was in some infrastructure companies and some commodity companies. So we had a fabulous success with Jindal Steel and Power. Their stock did really well, touch wood. Fortunately, we got a good exit. So we invested in a bunch of companies that is going to be next Jindal Steel and Power. So, it was, and we invested in some infrastructure companies, some natural resource companies in those days. This is what I would like to say, everything is not about really buying long term. You have to understand which is a wife and which is a,
What? Sorry?
So, I think,
This discussion is censored at every level. Inside information, sit on your ass.
Doesn't matter.
Okay.
So I think, that time, we actually invested in a lot of these companies, extrapolated, thought that, interest rates are 6 or 7%. So in our analysis, we said maximum what it can go to 8%. So let's put 8% in the spreadsheet and still feel that can it work? Obviously a lot in the external environment changed. But what I really feel terrible about, in spite of being convinced that we are on the wrong track, we still kept going and doing more and more and more and more work on those companies, on those managements. And every time we thought, thoda upar jayega to nikal jayenge. So
I think the lesson you're trying to communicate to investors here is if you see something going wrong, get out. Don't wait for the right price.
That is one. And second, I'm saying everything is not for long term. As Manish politely said, a lot of things are Holi Diwali. So you have to understand when you're buying that, what is it you want to keep for next 25 years and what you want to play tactically. And I am of the camp that you can even play tactically. Some people may not have that skill, but some people may have that skill. If something really becomes cheap, you have to invest. But knowing fully well that these are transitional multi-baggers and they are not true multi-baggers.
Okay. You also said don't, for the lalach of a little bit of return on the phone you were telling me, give up on quality, right? Some of the stocks that you invested in this time period, I'm not trying to take names because I don't want to embarrass you or those companies, but some of those stocks, did you invest even though you had some doubts somewhere in your mind that maybe this is not 100% proof?
We had a lot of doubts.
And yet you invested.
In relative terms, they were looking so cheap. That, I thought the management is discounted at this price. But it never gets discounted. Bad management never gets discounted at any price.
Fair enough. Ramesh, ugliest investment decision in your life?
You asked me this on the phone. And
you didn't give me an answer. So I'm assuming you've never made an ugly decision. No?
I want to ad lib.
Oh, it's too ugly to tell us about it.
No, I'll tell you, actually, it came back to me. It's like a horror story. It came back to me. In the technology boom, I never got seduced by the low quality technology stocks, the visual impairment, and there's a company called SSI, which was going to the stratosphere. They had a press conference at the peak of the bull market saying, we're tying up with NASDAQ, and it was such a load of baloney even at that time. I never believed that. So I never got ahead, sold in time, no issue about it. Then the market started falling, right? And at some point, SSI went from, I don't know, whatever price it was, down to say 3,000 rupees or 3,500 rupees. May hit at 10,000, then went down to 3,000. Now I'm saying it's down 60%. Everyone was bullish about it. Maybe there's some bargain left in it, okay? So I bought 400 shares of SSI. 15 lakhs, 20 lakhs must have cost me out there. Never saw that price which I bought it even for the next moment, right? And I thought, what's going to happen to Ramesh Damani? 400 shares SSI mein kya ho jayega mere ka? I ended up costing me 400 shares 10 lakh rupees in that simple investment. Because the stock kept going down, kept going down, kept going down. Finally, it was so painful, Menaka. I went out, the cell phones had come by that time. I went out of my office, called my dealing room, and I said, please sell my 400 shares of SSI. He said, kya bhava bejun, sir? I said, best market rate. Please don't tell me. Please sell it. After I sold it at 600 rupees, it went down another 90%. Okay? So, I mean, it can't get uglier than that. I mean, how could you possibly lose 10 lakhs in 400 shares? I did it.
Okay, great.
That's pretty ugly.
This is a bunch of horror stories, and I'm sure if we had another hour, we'd be able to share much more. I'm told by my producer that we're 22 minutes over time. Do we have a few more minutes to take questions from the audience or to do any more? Or are you guys all tired and want to go home?
Disclaimer from all our sides that we discussed about individual companies. We have huge interest in all these companies. Please ensure that you consult your advisor or whoever you have to consult before acting on it.
Madhu's lawyer has asked him to learn this and say it in the panel discussion.
On behalf of everyone.
On behalf of everyone. All right. Yeah.